Hey, GoPro traders, and welcome to another Monday market review with yours truly, Ian Giffen. I hope you guys had a great weekend, certainly down here on the southern coast of Africa, between the mountains and the ocean. We had a fantastic weekend, but it's time to get stuck into the markets again and to make sure that we follow our rule sets religiously, make sure that we are 100% consistent in the application of our rule sets to the market conditions. Now, having said that, remember those market conditions, we need to be very careful about staying out of markets when the conditions are not appropriate. And I would say that largely speaking, there are still many markets that we really need to avoid. There's been a lot of volatility, additional volatility in the market, thanks to the, I don't want to call it a crisis necessarily, but this conflict between Russia and the Ukraine and the possibility of an invasion. There's been various things going on with COVID and so on. So we've actually had a few messages out from our brokers through the course of last week, warning about sudden changes in liquidity. And remember that that is the number one risk that we as traders face, is a breakdown in liquidity. So be sure to stay out of markets where the conditions are not appropriate. But then don't be afraid to jump into those where they are, because these are the kind of conditions where we can have sudden breakouts and things can really start moving very fast, and you don't want to miss out on that. So let's jump in as always to the Euro USD as a start here on the weekly time frame. You'll notice last week very little happening, and even just today on a Monday, it's already a bit late in the day, but almost as much as happened in the whole of last week has happened today. And looking on the daily time frame, you'll notice what that looks like over there. So having said that, a lot of people were looking at this pattern as a valid class 1 pattern last week, quite right too. But today's spike really messing us up. So unfortunately, where we had this pullback today, if you had any trades in there, it would have stopped you out. Now that's a very aggressive entry with more of a hybrid type setup, but even if you are going with an H4 impulse, it's aggressive simply because we are very much inside of both of our HTC channel and the LPO, and we know that going for class 1 patterns is somewhat more aggressive. But as I say, likewise, we've got these pretty dodgy market conditions at the moment, where every little bit of news coming out of this Ukrainian conflict tends to affect the market. All right, here we have the cable. As always, very little happened last week as well. Weekly time frame, nothing much, and likewise on the daily. So nothing for us to look at there. We can stay far away from that one at the moment. Dollar yen, we saw that high on the weekly time frame being ringed by last week's candle. So another unsuccessful test of this resistance level that we've seen established here since the third to fourth quarter last year. Nothing changed there, nothing for us to do at all. We don't trade much higher time frames, so we're not looking at the validity of any sort of overlay here, because that is the weekly time frame. But dropping down to the daily, again, you can see how that looks in more detail. And last week really just not even making a higher high. So it's just confirming that ringed high of the previous week. So another one to really stay away from at the moment. Dollar Swiss, likewise, deep inside the channel, nothing doing. Last week's candle, it wasn't a bearish impulse candle. So dropping down to daily, you'll see how through the course of last week, it did break below that previous support level. Today, maybe even going lower. But again, there's nothing here for us to look at. It's really quite chaotic, very choppy. Right, the loonie, dollar CAD, likewise, a bit of a hammer with that weekly candle for last week. And the last 5 days, really not doing anything of interest at all. Stuck inside the channel, no valid patterns, moving on. Aussie, last week's candle as well, very little going on. This is really, as I said, this is what's really important for a professional trader to know when to do nothing. Daily time frame, likewise, nothing of interest for us at all. All right, so the Kiwi is something we spoke about last week and worth noting and keeping an eye on the overall higher time frame weakness we've seen on the New Zealand dollar. But through the course of last week, even though it ringed that high, you'll notice that, and it ringed that high with that slightly lower low, it was still a bullish candle, and it looks like even today it's following through on that bullish movement. But we do have a significant resistance level in place here. So let's see what happens. If I just blow this up slightly, you'll notice that in this retracement wave that we've been seeing, even though it did break through the dynamic support level that we've got for this trend line, and we've also got the dynamic resistance level of the daily 55 EMA still very much in sight. So we've got a confluence of resistance here. I'm very interested to see what happens here. If this does roll over and give us a bearish impulse candle on daily, I'm going to be shorting it. I know that's a very aggressive approach, but it is in line with the hybrid strategy. So breakdown and sequentiality of cyclicity here on execution time frame. So bear in mind that our selection time frame for that is that weekly time frame. But otherwise, nothing else that we can do there. We need to wait and see. So that would really be dollar strength coming through for us to be able to do that. Right, so moving on to our yen crosses here on the euro yen weekly time frame. Yes, okay, so we got a bearish impulse candle, but we're still deep inside the channel. There's no valid pattern, but it looks a bit like this on daily, where it just failed, I think, to give us that the valid class 1 pattern. If we look at this, just to confirm the close on my broker, we're looking at 1.30 with a low here, 1.25. So just that closed just inside of that wave, which because we use software to evaluate this, it really just draws the line exactly where it is. Marginal for sure, and it did roll over. So almost a class 1 pattern. And if your broker had given you something better to look at, you may well have been looking to take a trade here if you're a hybrid trader. For those of you who are also trading the likes of an H4 Impulse, you may have had an entry there, and you should have survived that, the pullback that we had throughout the course of today. So that one should be okay. But as I say, we didn't get it because we really do draw the line where it needs to be drawn. Right, so looking here at the Gbp Jpy, last week's candle again, there's nothing here on weekly time frame. It didn't even ring that high, but still that resistance level being respected at the moment. And on the daily time frame, looks like we might have this high ringed at the end of today as well. So really, this is just chop. We're not interested in that at all. So I'm just going to run through these quite quickly. This is the daily time frame. Let's quickly look at weekly here on Swiss yen. You can see again that technically, yes, we are in a trend here because of the breakout, but it's a weak trend because it came back inside of the channel and the previous retracement waves price territory. So all of this has kept us out. And you can see that as the market has come back, we ringed that low. As the market has come back over the last couple of weeks, it continues to respect this resistance level. Let's wait and see what happens this week. If you are trading outside of HTC channels, if we do get a close at the end of this week, outside of that, then maybe next week. But for now, nothing. Let's just have a quick look on daily. As you can see, going sideways. Nothing really of interest for us there at all. CAD yen, likewise, here on weekly, even less to look at. Daily time frame, nothing. You can see the yen pair is really dead at the moment. Nothing either on Aussie yen. Just a common theme right now. And this, folks, is what's really, really important for you to know. As I've mentioned ad nauseum, one of the most difficult lessons that I've found to teach people in learning how to trade is how to do nothing. And you can see right now, many of these instruments, we just need to stay away. And here's the last of our yen crosses on the Kiwi yen. Similarly, leave it alone. Right, so moving to our euro crosses here on Euro GBP, technically in a bearish trend on weekly time frame. Last week, ringing that high, and we also got a close outside. So we had a close outside the previous week, was marginal, but nevertheless. So for those of you looking to trade daily impulse, I think some of you did take a trade there, certainly once we got back outside again. For those of you who waited for that, you would have certainly had an entry opportunity on Friday last week, and you may well have shorted this market already. Now, not something that I'm doing because of that overall weakness that we saw there. That weakness even showing itself here on the daily time frame. with a strong bullish impulse candle broadening out that range. So I haven't done anything there, but for those of you who are, I quite agree that this is still overall a bearish picture, especially after last week's close. Euro Swiss, likewise, interesting here on the weekly time frame, where definitely, as we know, there's no trending market at all. But we did have a class 1 M pattern last week, no question about that, a very strong class 1 M pattern. And this is one of the instruments that folks know that I generally stay far away from. But having said that, we actually had our take profit hit on a trade for this one today. So if we had a loser there on the Euro USD, this certainly made up for it. And again, this is very much a hybrid type trade where we saw a breakdown in the cyclicity of the retracement wave on the daily time frame, which this is the cyclicity on the H4 time frame. So the wave on the daily time frame is the trend on the H4. So that trend came to an end. Those of you who trade hybrid know this is a classic entry, able to get to break even quite quickly, using quite a deep target as we should. We should be using the weekly ATR as our take profit, and as you can see, that was nicely hit not too long ago during the course of today's price action. So you might be surprised to see me trading Euro Swiss, but that was too good to pass up. All right, Euro Cad, nothing on the weekly and nothing on daily either. Technically also class 1 M pattern, but it's just rubbish, really. This is just terrible. There wasn't even any real cyclicity in any kind of a phase 2 that we might have been looking at here on the H4. So a good one to stay away from. Euro Aussie, like a weekly time frame, sure, we got that bearish impulse candle. Nothing on weekly, nothing on daily either. So no valid pattern deep inside the channel, nothing to look at. And the last of our Euro crosses, here again, the Kiwi weakness showing itself. Look, so it has come back in this phase 2 retracement wave over the last couple of weeks. Certainly last week with that bearish impulse candle. So if you're looking to trade a hybrid on this, you'd be looking at that cyclicity on the daily time frame, very much still intact. You're waiting for a breakdown in the sequentiality of cyclicity over here. We had a hybrid possibility where we were looking for the end of this phase 2 to go long. And that, as you can see, didn't work out. We got stopped out over there. So make sure that you always limit your downside, folks. There's nothing wrong with having losing trades as long as they're small and your winners are big. Just take a quick sip of here. It's that time of day. Right, Gbp Swiss, looking at our pound crosses. Again, weekly time frame, you can see that this is absolute rubbish. Daily time frame, shocking. Looks like today is going to ring that high, but honestly, we're not interested in this instrument at all. GBP CAD, quite frankly, likewise. Now, having said that, quite a strong bullish impulse candle here on weekly, which looks like this on daily. So that was Friday. For those of you who are pure channel traders, because this is not a valid pattern, you may well have been looking for an entry opportunity through the course of today. Not sure if you actually got it. Well, actually, yes, there was. So remember, you've got to add up your points, but this candle over here is on the H4 time frame, a valid impulse candle. Likewise, also counts as a pullback candle. So you get your 2 points there. Entry should be in this. It's pulled back, obviously, in the last 4 hours or so. But that's the name of the game. So definitely a valid entry if you're only trading the breakout of the channel. GBP Aussie, here on weekly, you can see last week's candle not looking like much at all. And here we have the daily time frame. So definitely not of interest. Deep inside the channel, no valid patterns. Here we have GBP Nzd. So interesting one. This, I mean, we obviously saw on the close of Friday that we had a bearish candle, but this candle with a higher high and a higher low did ring that preceding low. No question about it. So that indicates on a single time frame analysis the end of that bearish retracement wave. There wasn't even really any cyclicity here on the daily time frame. But that being said, if you look at the cyclicity here, the cyclicity is still overall bearish. So it's one of those situations where we will still have a retracement wave followed by another one. So phase two, end of that trend. Certainly this carries on the way it's going at the moment. And on the daily time frame, that's certainly very visible, where we can see that we've had a complete breakdown in bullish cyclicity. We knew that before. So we stopped looking for bullish trades a while ago. So nothing to do there. Right, so looking at some of our other crosses, CAD Swiss over here, weekly time frame. Yes, we had a bearish impulse candle on the weekly time frame last week. There's nothing overall here. Again, deep inside of a channel. Last week's close still inside, no valid pattern, but today we're testing the support level of our daily HTC channel. So let's wait and see. If we do get a proper breakout over here, CAD weakness, Swiss franc strength, then maybe we can look to short this. But that is definitely something to look out for this week. But at the moment, there's nothing. The way things are going at the moment, I wouldn't be surprised if the support level continues to be respected. Aussie Swiss weekly, absolutely nothing for us to look at. I mean, look at this on the daily. Terrible. Just sort of context here. We spoke about this, I think, last week. This is the H4 time frame. So let's just look at daily quickly. We are inside of the channel here, but it was a valid class 1 setup, scratching around for something to trade. We had a bullish hybrid over here, got into that, ultimately got stopped out by that spike. So at no loss. So it didn't cost us anything. Unfortunately, for those folks who waited for the H4 impulse entry over here, the loss was more significant with not being able to trail the stop at all. So it really does illustrate how it's good to be able to get in sooner, no question. It helps us to manage our stop more aggressively, more quickly, but our success ratio is lower. That's the difference between a hybrid H4 impulse. H4 impulse will have a higher average loser, but a higher success ratio as well. Aussie Cad, there's last week's weekly candle. Nothing really going on over here on the weekly time frame, but on daily, obviously, we did have that breakout on Thursday. So you folks who are looking to trade H4 impulse on this on Friday and did look on Friday would have gotten in, where are we, 17th, possibly somewhere in this region over here, and obviously you'd be trading your stop, you'd be in this trade going on. So it's one of those things about what time is your cutoff. If you'd had the opportunity to jump into a trade over here on Friday, then over here on Friday, all well and good, that would have been it, and you'd be doing very well. Depending on your take profit, you may even have hit that. So a possible winner there. Aussie Kiwi, so weekly time frame again, last week, that inverted hammer. So we are still technically in this bullish phase 1, but I think that may well be coming to an end, noting that we do, in fact, unless we get a higher high this week, that high has been ringed, and then after this week, we'll be in a retracement wave. But looking at the lower time frame here on the daily, you'll notice that this is pretty much already in train with a phase 1. So bullish cyclicity having broken down. We discussed the daily impulse trade on this as well, based on the higher time frame selection criteria being met on weekly. There was a trade here on the daily impulse, managed our trailing stop. That too got stopped out over here for a small loss, and that was on Friday. So that's the name of the game. Now, we don't mind that. We have our fair share of losers, but they're small, but our winners are big. And that's what convexity is all about. Right, moving on to the last two of our currency pairs, Kiwi Swiss here. Another one of the Kiwi pairs where we're interested in this overall Kiwi weakness. It ringed that high again last week. So this resistance level is still holding, no question about that. So we're outside the channel, we're in a trend, it's a strong trend, a class 1 M pattern over here, no question. So you should be looking for an opportunity to short this. That being said, this is almost a hybrid of a hybrid, because on the higher time frame, we are technically, the retracement wave is over. If you look at the time frame here on daily, it's not necessarily over because bullish cyclicity is still intact. So we're looking for a breakdown in the cyclicity, and that may well be happening soon, but an inside bar is not going to do it for us. But if we do get this high ringed and a rollover, then certainly I'd be looking for the final selection conditions in order to short this one. Whether you want to call that a daily hybrid or a daily impulse, I really don't care. So it doesn't matter. But either way you want to go, I think that's looking good as a setup. We don't know that dollar strength is going to come through, or if Kiwi weakness is going to continue. This is not a predictive exercise, but it's a very good looking setup. Remember, we lose about half of those, and it doesn't matter because the winners are big and the losers are small. Right, so looking at Kiwi CAD, let's just look at the weekly first. Right, another example where for the moment we are in a bearish trend on weekly and a strong trend. Now, as of the close of last week, we were still in a potential class, well, we're in a strong class 4, but in order to go into an M pattern, it's a class 4W pattern at the moment, in order to flip over into our M pattern and for it to remain a class 1 M pattern, then we cannot have a close inside this wave's price territory. Now, obviously, that we've still got a whole week to go before we find that out. But at the moment, the cyclicity forming this wave on daily is still very much intact. We were looking for a potential breakdown in that even on Thursday with that test of that resistance level, but Friday closed above, giving us a bullish impulse wave. So the cyclicity here in this retracement wave is still intact. We're looking for a breakdown of that, and then we'll start looking to trade this in a bearish direction with our various strategies. So at the moment, we're leaving it alone, but we've definitely got our eye on that as well. Right, so that's the currency pairs. Let's have a quick look at gold, which let's just look at weekly first. Right, so weekly, we had the close outside last week, no question about it, which means that from today, we can start looking for bullish trades using something like the daily impulse. But nothing yet. We've got to wait for that pullback, make sure we've got enough points. Having said that, on daily time frame, we know that we have had the appropriate conditions already for a bit longer. We did have that breakout already on the 11th. We got 2 bullish trades out of this. Certainly the first one was here. Let me just drop down to our execution time frame being H4. That one went straight to target. That one went straight to target. Now we had another one on the H4 time frame with today's pullback. In fact, we even gapped higher over the weekend. Pullback has brought us all the way back. We're still in this using our 3-6 rule. So we haven't been stopped out of this trade yet. In fact, we're hovering around break even on this at the moment. But there's been some bearish strength over here through the course of today. We're just going to bide our time, follow our rules, and see what happens. Having had 2 very nice winners on this already, we know that the odds are in our favor to have a loser now. We also, just bearing in mind, we used our scaling in approach for this, which we teach our more advanced traders, which means that this trade over here made 9 times what it normally would do. And that really does cover any loss that we might have over here by quite a stretch. Very nice reward to risk ratios there as well. Right, moving back to the interesting stock markets, certainly the US markets. Last week, bearish impulse candle on daily. We don't have a class 1 M pattern over here, but we discussed the Elliott wave point of view on this last week and the week before. So if you're interested in that, please do go and have a look at the recordings of our previous Monday market reviews. So that's the Dow. Yeah, still inside of the channel, no valid pattern, but I'm still interested to see whether we're going to have a bearish breakout. Obviously, a lot depends on what happens with the Ukraine situation. If we do have some kind of invasion there, then much as we feel very sorry for those people, it's going to probably be amazing trading conditions. Right, so here's our S&P 500, similar picture, but a little bit more bearish, as we know, because S&P 500, even especially the Nasdaq, tend to lead the way. They're not as sluggish as the Dow. So Nasdaq first, S&P second, Dow third. So here we have the Nasdaq, which even on the weekly time frame, we are well outside of the channel. It's a class 1 M pattern. I know folks have been trading this already. There have been multiple opportunities to short this. We had a perfect setup, as I think I discussed last week, to short this with a hybrid entry here on the open on the 11th. And that still is going. So nothing wrong with that one at all. And of course, if you wanted to trade this on the lower time frames, we do need to wait for that. We don't have a valid pattern here on daily, and we're still inside the channel. So the only thing there was the daily entry. Right, so those are the stock markets. Here we see the oil price, which has been very good to us for a while. I mentioned last week that we had all of those impulse candles. Well, last week broke that. It's a bearish engulfing candle. It's not an impulse candle, but it is bearish, and it certainly isn't a bullish engulfing. Now, cyclicity here is technically still intact. It's showing more weakness than before because these daily candles closed back inside of the channel and the previous retracement waves price territory. So definitely showing some weakness there, but not so much today. Well, we can put not so much on Friday, and today is following through on that. So if we do get this low ringed, we're going to be advancing our analysis. I mean, this is still a very bullish market. And of course, if the situation with Ukraine does go south, the oil price is going to go through the roof. Now, that's just based on what happened historically. Right, so Bitcoin, weekly first, there it is, still technically in a bearish trend. Yes, we pulled back inside the gym. We discussed all of this last week. But last week did give us a bearish impulse candle. If there's anything that you want to go, just go back and check the previous recordings, folks. You know, a lot of that stuff is still there. But what's interesting is that we did get the end of this retracement wave. It is a valid class 1M pattern. So for those folks who are looking for the breakdown and sequentiality of cyclicity, it was textbook, absolutely textbook. So open of Friday's market, you really should have shorted this on the daily time frame, and Bob's your uncle, we're into a nice bearish trade here. So also would have trailed the stop somewhat already if you're using the 2-5-step rule. Had a nice gap over the weekend. Now, none of us really wants Bitcoin to go too far south because most of us own quite a lot of Bitcoin. But long term, we don't mind. It's like holding gold. It's digital gold. Really, it's what my kids are going to have. So I have no doubt that Bitcoin is going to go to $150,000 plus. But in the meantime, we don't mind trading the short-term volatility in whatever direction the market tells us. So that was that's a nice example of a hybrid on a non-currency instrument. All right, so finishing off with US Treasuries, we're still in a retracement wave over here, and nothing for us to do. That's on the daily time frame, but even so on weekly, as you can see, we had an inside bar last week, but the daily time frame just showing us that that's a retracement wave. So it is still a bearish trend, no question, and also a potential class 1M pattern. In fact, the market would have to go quite some distance before it actually compromised the potential class 1M pattern here. So keep an eye on that as well for those of you who are trading this fabulous broker, where you get all these great instruments, and certainly those of you who are now trading our funded account program on this, with this particular program using this broker, where we have access to all of these other great uncorrelated instruments. Right, folks, so that's pretty much it from me for this Monday market review. As always, if you find this useful, I'd really appreciate it if you would hit that like button, and even more so, if you want to make sure you are notified of new training as it comes out, hit that subscribe button and the notifications bell, and you will know exactly when that is going to happen. We do bring out professional trading, training on our trading all the time, so make sure you subscribe to our channel to get the benefit of that. All right, folks, so that's it from me for today. I hope you have a fabulous week's trading. Remember, you've got to be really cautious with the current market conditions, but when the market takes off, do not hesitate to follow your rules. I'll chat to you all later in the week. Bye for now.